How's it going, guys, and welcome back to the channel. And today what I'm going to do is I'm going to go through a little strategy on how people can trade if they are working a full-time job, or how people can trade if they don't want to be sat at the charts, if they are not available for a London session, New York session, etc. And literally all they want to do is set their alerts and come back to the charts whenever their alerts go off. So what we'll be doing within this strategy, and if you are working full-time or whatever it may be and you've got a little bit less time at the charts, you want to be trading at least 15-minute entries. So first of all, what you want to do is you want to go ahead and decide whether you are happy to just take a risk entry, or if you are wanting to, get that little bit more confirmation, which will obviously lead to less setups. But what that will do is it will give you a little bit more confirmation and a little bit higher strike rate. So obviously I'm assuming that a lot of you know what risk entries and confirmation entries are, but if you don't, I'll just go through that a little bit right here. So basically what risk entries are is, for example, if we are coming down, in a bearish trend and we come up and then we get an explosive move to the upside, and for example, if we've got like a demand zone in this area right here, what you will get with a risk entry is you will get a move back. A corrective move back is, preferred. You will tap into this demand zone here, and then, price will continue. So that right there would be your risk entry. So let's just say some demand. So that would be your demand zone. You would come down, you would get involved, and then you would take, price to the upside. Obviously with 15-minute entries, the stop loss size is bigger. So another thing that you want to decide on is whether you want to enter at the open, whether you want to enter at the 50%. You can also enter at the 25%. And, on extreme cases, what you could do is you could enter at, like the 75 or the 25%. So what that will do is it will obviously, sometimes you'll miss trades, like in this example here. If you entered it, you would miss trades. If you entered at the 50%, you would be tagged in. But yeah, that's another thing that you need to go ahead, decide whether you want to enter at the open or you want to enter at the 50% to get a smaller stop loss and a little bit higher risk to reward. That right there would be your risk entry. So again, for the confirmation entry, if we are coming down in a bearish trend, what you would get is you would obviously get a demand zone created right here. Hopefully you get a explosive and an impulsive move to the upside. Then hopefully the criteria would be to get, a corrective move back, just showing that price is slowing down a little bit and that we are more likely to go to the upside. What then would happen is you would tap in again to some sort of demand on the left hand side here. So then what would happen is you would take this low right here. So you would take this low, you would take this high, you would then tap back in, and then you would explode to the upside. So basically what you are doing is you are tapping into a demand right here. You are tapping into a demand and then you are getting a 15-minute change of character, just to show you that, price is wanting to go in a certain direction. So if I just put that to like that, and then as you can see, the change of character is completed when this high right here has gone. And then what you are doing essentially is you are getting, involved somewhere around here. And then this is where you would get, your 15-minute confirmation entry. So what that will do is it will also give you a little bit of a smaller stop loss. And then obviously you can target, 15-minute highs, whatever you want to do. You can target just 5R if you want. But wherever you target, it's really irrelevant at this moment. So this is your confirmation entry. The example before was your risk entry. So you can take both entries if you want to do that. But I would recommend, choosing one or the other and just keep it consistent across the board. Some people might want to, just use risk entries because obviously with confirmation entry you will need to pay a little bit more attention and you'll need to spend a little bit more time on the charts. Whereas with risk entries, once you get this explosive move up and you get a nice POI to trade from, all you simply do then is you go and you place your entry right on the demand zone and then you can take it to, wherever you want. But yeah, like I said, what you want to do is just go ahead, choose which edge type that you want to take. For me, I like confirmation entries at most times, to be fair. I don't really take risk entries on the lower time frame. So when I did used to trade the 15-minute, what I would do is I would take the confirmation entry because I could check the charts, a little bit more often than a lot of people can. So, risk entries might suit some people more than others. So I'll just go onto the charts now and I'll show you a couple of high probability trades that I've just marked out. So I've just deleted this right here. So as you can see, we are on the charts, and what you want to do is you want to use all of the confluences, like market structure, order flow, premium discount, everything like that. You know, most of this stuff I've already taught on the channel, and there's videos about this on the channel. So if you are struggling and you want to know what those things are and you don't know, feel free to just go through the videos that are already available on my channel, and that will explain a lot. And there is where you can get started. So as you can see, we on this example right here, we are currently bearish because we got a breakout structure to the upside here. We got another breakout structure to the upside and then to the downside. So we would be playing between this swing high and this swing low. But what you can do is you can take counter trend trades up and towards the premium. As you can see, there's a lot of imbalance here that needs to be filled. So that's a little bit of a confluence in order to take this trade. So what you can do is, as you can see, what has happened is we've come down, we've had a 15-minute change of character right here. So that's showing that price wants to, you know, go higher. And then what we got is we got a second breakout structure confirming that 15-minute order flow is bullish internally. So as you can see, we break out of this, you know, demand range, we create another demand range, which we do break out of. So we've got this demand range right here. What happens then is we go ahead, break this demand range, we get a nice POI right here. We get this nice, you know, impulse to the upside. It's left a lot of imbalance. It's a really nice POI. It swept liquidity under these lows, and that's one of the reasons why I would be happy to get involved in this. So if I just zoom in, as you can see, like I said before, you can choose whether you enter at the open, enter at the 50%, but in this example right here, price does end up, and you know, it comes quite high, to be fair, and it does continue. But what you could do is you could enter at the open, you could target 5R, and as you can see, that's it pretty quickly. But what you could do is you could enter at the 25%, or you could enter at the 50%. If you enter at the 50%, obviously it nearly doubles your risk to reward. So yeah, if you want to take this trade, let's just see how long it took. So you got tagged in right there, and the trade ran to there, so around 6 hours, which is actually less than most full-time jobs and full-time working days, because, you know, usually people work around 8 hours a day. So, you know, in 6 hours you've made 5R, and if you've got a sizable account, you know, that's really not to be sniffed at. But moving on, as you can see, as I said before, we get this nice move up. So we get an explosive move to the upside. We get that nice corrective move back, showing you that price is slowing down. And then what we've got is we've got a little bit of inducement just sitting above this POI, you know, to fuel the move to the upside. Again, like I said, in this example, I did enter on the open. So if you entered on the open, you would be tagged in. But if you entered on the 25%, 75%, or the 50%, you would actually miss this trade. So, you know, it swings in roundabouts really. If you are willing to enter at the open and use a little bit of a bigger stop loss, you'll be tagged into more trades, and that's just a given. But overall, like I said, you need to choose just, you know, which type of entry you want to trade and where you want to enter. So as you can see, a 8 pip stop loss on a 15-minute chart is still pretty good, and you know, we hit 5R pretty easily on this trade to this 15-minute high. Obviously, you can see price does go and make quite a lot of more percentage, but you know, you want to be taking at least the majority of your position off at this high right here, because as we know, after a breakout structure, the likelihood of getting a pullback is pretty high. But yeah, moving on, we do get a break to the downside. So in this example here, we are bearish. So we've taken the high, taken the low, we've had a 15-minute break to the upside, 15-minute break to the downside. So in this example here, this would be a risk entry. So you could take a risk entry on this wick right here. Again, the open does tag you in, and the 50% does tag you in. So you could double your risk to reward if you wanted to enter at the 50%. You could also get involved in this trade on a confirmation entry. So as you can see, what we get is we get a take of these highs. So we take this high right here, we take this low, and what you'll see is that we've come down, we've got a reaction to this demand. So this reaction right here, you could enter on. So what you would do is you would take your, your jam box, whatever you use to set your entries. So once this chalk low is broken with this bearish candle right here, if you set your order, what you could do is you could get involved on this very next candle right here, and then obviously put your stop loss just above the high, and then you could target, wherever you want. So 5R is it pretty easily, a really nice target, quickly hit. So you could also get involved in that on a confirmation entry. So zooming out and moving on, let's just go ahead and find some more good examples. As you can see right here, this is another confirmation entry. We've seen a break to the upside right here, and then we broke to the upside again. We've got our expansive move to the upside. So what we've done is we've made a impulsive move to the upside. We've got this demand zone right here, and then what we've done is we've come back. We've taken the low, we've taken the high, and then we've come and tapped back into this sort of demand zone, and then you could get involved again on the confirmation entry. As always, you could take the risk entry here. So you could take the risk entry at the open. The stop loss size is 14 pips. 14 pips on a 15-minute time frame is still very good. But let's have a look at the confirmation entry. That is 8.5 pips. So again, what you could do is obviously take the confirmation entry, reduce your stop loss size, and again, as I've mentioned a million times already in this video, if you enter at the open, you are tagged in. If you enter at the 50%, you are not. But if you enter, at the 75%, you probably are just about tagged into this trade, and you could, increase your risk to reward. But like I said, just keep it consistent with where you're entering. You don't want to be entering at the open on some trades, at the 50% on the other trades. Just keep it consistent and, just choose one entry. So again, moving on, what we've got is we've got an expansive move to the upside. We've got an order block right here. As you can see, it comes and tags back toward this body right here. There's a lot of inducement just above this zone, so there's a lot of liquidity to be taken. So with that being said, a lot of inducement resting above this zone. As you can see, we come back in, we get the confirmation entry. So again, what happens is we come down, we take the low, we take the high, we move upwards, and then we tag back in towards this demand zone right here. The stop loss on this specific trade is pretty big, but overall 13.5 pips. You can still hit a 1 to 5 on the 15-minute chart, which is brilliant to say the least. And the last but not least, the last trade right here, another prime example, is we've had a move up. So what's happened is we've reacted to this demand zone here, we've pushed up, which makes this the extreme of the reaction to this, and this is what ultimately did flip this demand into supply. So what you've also done is you've taken liquidity from above these highs right here. So you swept liquidity, it's a flip zone, it's broken structure. This zone's got quite a lot going for it. So you just need to, like I said, if you don't know what all this stuff is, there's videos on my channel that you can go ahead and watch. But then what happens is we, impulse down, we get a nice corrective move showing us that price is slowing down. We tap into our POI and then we explode to the downside once again, breaking the structure here. So what you could do is obviously this low right here is a weak low because it's failed to put in a new high. So ultimately, what is the expectation? The expectation is for this 15-minute low to be taken out, and you could also target this low, but like I said before, you could just target 5R if you want to do that. So 5R is hit pretty much straight away. You're not in this trade very long at all. If we just measure that, what's that? So you're tagged in right here, and then you are taken out. So it's 1 hour and 45 minutes. On a trade on the 15-minute, that's absolutely ridiculous. But like I said, the overall expectation is for this 15-minute low to be taken out. So ultimately, you could go ahead and, target this low. You could take partials at 5R just to bank some profit. But overall, like I said, this low should be taken. But yeah, that's just pretty much it, and that's how easy it is to trade the 15-minute. A lot of time trading the 15-minute does reduce a lot of stress. The 1 minute time frame can get a little bit messy, but overall, if you are interested in trading the 15-minute, this is how you can do it, and I would recommend it if that's what you're looking to do. Like I said at the start of the video, risk entries, if you are working full time, will be a little bit better, but if you can check the charts a little bit more, say if you haven't got a boss watching over you and things like that, and yeah, if you could check the charts just a little bit more often than some people, 15-minute confirmation entries do also work, and it might give you a little bit more confidence in taking that trade. But like I said, the 15-minute chart is brilliant. You can get a lot of risk to reward trading the 15-minute chart. But yeah, without further ado, guys, thank you very much for watching. If this video did help you out and provide you any value, please remember to drop a like on today's video. As always, if you have any questions, drop them in the comment section down below. I'll be sure to get back to you as soon as possible. But without further ado, guys, thank you very much for watching, and I'll see you in the next one.